Hello students. So we start with case studies. The first one is on calculation of standard gap. So this is our problem, this is our question. Bank B has following repricing assets and liabilities. Call money 300 crores, cash credit loans 240 crores, cash in hand 200 crores, saving bank accounts 300 crores, fixed deposits 300 crores, and current deposits 240 crores. On the basis of this information, we have to answer the following questions. Question number 1. What is adjusted gap in repricing assets and liabilities? And these are our options. 540 crores, 600 crores, minus 60 crore, and 60 crore positive. Now, solution. So, repricing assets or repricing liabilities. Repricing asset is an asset where interest rate change can take place. Similarly, repricing liability means where interest change can take place. So in case of cash in hand, in case of current deposit, no interest is involved, hence they are not repricing assets or liabilities. All other assets given in the problem are either repricing asset or repricing liabilities. So repricing liabilities here include saving bank accounts and fixed deposit accounts. Similarly, repricing assets include call money and cash credit. Now we can solve it. Saving bank plus FD. So saving bank we have 300 crores, FD we have 300 crores, so total is 600 crores. Call money and cash credit. So call money we have 300 crores, cash credit we have 240 crores, so total 540. And the net is, the gap is 60 crore. But this gap is negative gap because repricing liabilities are more than repricing assets. So we have negative gap. So our answer will be C. Let us go to second question. The same information. What is change in net interest income if interest falls by 2% points across the board? So there is fall in interest rate in case of all assets, liabilities, and these are our options. Let us see the solution. So there is a negative gap. We have already seen in the previous question. If interest rate declines, as happens in this case, interest expenditure will decline more than interest income. So when interest expenditure declines more, this will increase the net interest income. So to what extent it will increase the net interest income? So increase will be 60 crore, that is gap, into 2%, that is 1.20 crores. So net interest margin, it will improve by 1.20 crores. Let us now see next question. So with the same information, here what is change in net interest income if interest increases by 2% points? So there is increase in interest rate across the board. So these are our options, the same options. Let us see the solution. So there there is negative gap of 60 crore. We have already seen if interest rate increases, interest expenditure it will increase more than interest receipt. So when interest paid increases more, this will reduce the net interest income. Now to what extent will it decrease? We can see. So decrease will be 2% of 60 crore. That is 1 crore 20 lakh. 1.20 crore. So our answer should be B. So in the previous answer, in the previous question, there was decrease in interest rate. So that led to improvement. In this case, it is increase in interest rate. So it is leading to decline because there is negative gap. If there would have been positive gap, then our answer would have been just opposite of that. Now, based on the same information, let us see a new question. If interest rate falls on call money by 1%, on cash credit 0.6%, on saving bank 0.2%, on FD by 1%, what is change in net interest income? In the previous question, the fall was across the board. Same for all assets, liabilities, but here it is not same. So these are our options. And here lies our solution. So here we have to make calculation for each asset liability separately. So first of all, on call money. So on call money, 300 into 1%, that is 3 crore. That is the change. That is the decline. On cash credit, on 240 into 0.6, that is 1.44 crore. Hence, the total decline is 4.44 crore. Let us see the position in case of liabilities. So, fall in interest cost for liabilities. So, saving bank 300 into 0.2%. So, it is 0.60 crores. FD 300 into 1%. That is 3 crore. So, total here will be 3.60 crore. Now we can find out the solution. So 4.44 minus 3.60, so the net decline will be 0.84 crore. So our answer will be C, decline by 0.84 crore. So in this question there was fall in interest rates. Now let us see the last question in the problem. If there is increase in interest rate. Now for many more such case studies, you can just be in touch with us. Our email ID and our website address, it is given on first page of this video lecture. Thank you and all good wishes.